it's Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage. Welcome to another edition of Java with Jared. Happy Friday, everybody. Hope you guys are doing fantastic, and happy December. Boy, year just flew by again. It's amazing to think that we are in the last month of the year, and I hope you had a good one. Unfortunately, for interest rates this last week, it wasn't a good one. Rates finished the week worse than where they ended last week. We had a lot of economic data, but I want to get to what I think is the most important news, and that we just got what the new 2018 conforming loan limits are going to be, and I'll let you know what those numbers are. But we saw a jump, which was great, and Denver, being a high-cost area, also saw a pretty big increase. So let me show you what those look like. So the new 2018 conforming loan limits, the national conforming loan limit is now going to be $453,100. That's up from about $423,000. So what that means is that someone can now buy a house with 3% down, and that house could be valued up to about $467,000. If they're putting 5% down, that's about $476,940. So if you've got a purchase price or a listing, or you've got clients that are looking in this range, they can now put 5% down at almost to a $500,000, which is pretty amazing. But as you probably know, Denver is in what's called a high-cost area. And so the high-cost limit has now gone up to $529,000, and that's for the five-county area. That pretty much all of Metro Denver. Boulder is actually higher. So on the high-cost type loan, you can only put a minimum of 5% down. You can't do the 3% down. So you can actually buy a house over $500,000. The max purchase price is about $556,842 if you're wanting to put 5% down. So if you got a listing or clients looking in that range, just got easier with down payments. Also, we are immediately accepting new locks on these new 2018 limits. They must close after December 15th, so you still can, get it in 2017. The other really important thing is FHA usually follows suit and matches the high cost area. So if they do that, you could purchase a house and put 3.5% down at the level of about $548,130. So I think that is some fantastic news. So in terms of economic data this week, again, interest rates finished worse, primarily due to the stock market setting new highs. That reached a level yesterday on Thursday because of optimism over maybe the tax bill passing. Looks like they are making some inroads there, and so that would be good for the economy, and sometimes that causes interest rates to suffer. But we did see a lot of economic data. We did see new home sales come in, and that showed an increase of 6.2% on the year-over-year number. That's a 10-year high. Case-Shiller 20-City Index also came in. From a national basis, the level increased about also 6.2%. The FHFA, which just measures the conforming loan limit, that showed an increase of about 6.3%. Denver did show an increase, but it showed the increase is moderating a little bit. We only saw on the month-over-month level in September, this is a little lagging, it only showed an increase of about 0.2%. The year-over-year number, though, did show an increase of 7.2%, and we were the fourth highest behind Seattle, Las Vegas, and now San Diego. So Seattle has always been up there, and Las Vegas and San Diego have been increasing quite a bit. But still showing that in Denver, still a great pace, moderating a little bit, which is overall pretty darn good. We did see pending home sales. That also showed an increase of about 3.5%. And the PCE, the Fed's favorite gauge of inflation, that showed that inflation was moderating, which could typically be good for interest rates. But with the stock market doing so well, that didn't really translate. But the PCE only showed that the inflation rate was increasing at a level of 0.1%. So that's still below the Federal Reserve's target there. We'll keep you informed as to what's happening with interest rates. Right now, driving the market is the tax bill and if and when that's going to pass. But this month, we do see the Federal Reserve meeting coming, and it's expected that there's going to be an increase to short-term credit there. We'll let you know with what's happening there. But get out there and tell your clients about these new conforming loan limits, and they can purchase a house with less money down now, still at fantastic interest rates. If you have any questions, please feel free to give me a call. Thanks for joining me with Java with Jared. Happy December. Hope everyone is getting all geared up for a great holiday season, and we will talk to you soon. Bye-bye.